Tesla broke out another 7% this morning, hitting highs of $424 on the news that Elon was buying over $1 billion in shares. And I ended up closing out my call options today for March 2026 $400 strike for a $58,000 profit. And in this video, we're going to talk about why I closed out those call options, why I opened new call options because I'm still in this position, where I think Tesla is headed in the next couple of weeks and next couple of months. And we are going to cover the massive Alpha Gold unusual options flow alert that hit on Tesla today, because even though the stock is up a lot, institutions are still buying. If you haven't already, I highly recommend that you go back and watch the videos that we've been going over on Tesla for at least the past week or so. The reason that I post videos and my analysis nearly every day is so that you can see in real time how I am managing my fund, how I am looking at a potential setup, and more importantly, how I am managing my risk and my position. Now, we've been watching this breakout for multiple months, right? We've been trading this going back into April when we bounced off of this smart money zone. But specifically for the past 3 months during the summer, we have been watching this massive squeeze occur for the past 106 days. Now, our thought process was that this stock was eventually going to break out to about $400 to $420 by October. And this has happened significantly faster than we had expected. Once we pushed through this liquidity zone or this resistance, we thought that we were going to see this move happen very quickly. Because if we look at our THT volume profile, which is our proprietary volume profile indicator on the right side of your screen here, you're going to see that there is no volume from $350 up to about $420. And when price ends up pushing through that resistance and there is no volume on the volume profile, we will see a massive breakout. We like to say that it's basically like taking a hot knife through butter. And that's exactly what has happened. Now, I closed these Tesla calls this morning because we were way above, at the time, my strike price of $400. At the time, we were trading right up at $430. And what I like to do is, as a stock is breaking out and begins to get way above my strike price, I like to close out that position and open up a new position. This is called rolling. And we teach this specifically in our options beginner course that you can find in the description for free. The reason that I do this is twofold. Number one, it's so that I'm constantly trading a strike price that people want to be buying, right? I initially had a $360 call. If Tesla gets to $500 in the next couple of months, nobody's going to want to buy a $360 call from me. But the second reason is so I can de-risk. Every single time I close an option and I open a new one, I only open it with 80% of that position sizing. So that this way, even if the stock rejects massively, I'm constantly taking little 20% profits along the way to help reduce my exposure to the downside while I'm still holding a ton of exposure to the upside, because I don't want to close out of this trade entirely. Because if this pushes up to $500, and since all of our indicators are still saying that this is a hold, there's no reason for me to do that. But I do want to take some profit off the table so that I don't just give it all back if this rejects. So if we take a look, I did end up closing this position here, and I actually went ahead and opened a call option for the same date, 3/20/2026, this time for a $450 call. And if we take a look at my trading dashboard that all of my students get access to, you will see that we are currently holding 20 of these Tesla $450 calls at an average price of $61.90. And this is because I still think that Tesla can continue to break out over the next couple of months. Our initial analysis, if we zoom out to the weekly, was that price was most likely going to break through this resistance and hit our target of $400 to $420. Now, why was this level of $400 to $420 our potential target and resistance level? Well, the reason for this is because of the same exact thing that we talked about on this volume profile. When we have thin area on the volume profile, very, very easy for price to break through, which is right up to 420 or 412. But when we have thick areas on this volume profile, price tends to reject at those levels. So if price were to reject, this is where it would be, and that's what's happening at this moment. For instance, you can see that all of this compression that we had for the past couple of months also lines up with this resistance level on the THT volume profile. And if you want access to that volume profile for free and learn how to use it specifically, that will also be linked in the description below. Now, looking at this setup, there's basically two ways that I think this is going to play out. Number one is the best case scenario. Price just continues to break out. Price pushes through this resistance and we just go right up to that $500 target that we've had for the end of the year on Tesla. This target we've had basically since February of 2025. I think that there's probably about a 40% chance that that happens. There's still a chance, right? And that's why I'm not closing out my calls. It's all of the criteria on this weekly chart is met. We've got the BX trender still showing buying pressure. We've got market structure still holding bullish. The only thing that shows a rejection here is this volume profile. So as of right now, there's a chance it just breaks right through it. What I more so think is going to happen is that price is either going to reject here at 420 and compress, which just means sit sideways for maybe a month. Then we get the breakout to 500. And the absolute worst case scenario here, in my opinion, is that price breaks out as it did, rejects at 420, comes back to test 360, because remember, this thin area on the volume profile, just as fast as we went up, we can just as fast come down. So if price comes back, it will most likely bounce at 360, and then we close the end of the year at $500. So no matter what, I think we're closing the end of the year at $500. It just depends on the trajectory. Is it going to happen very quickly? Are we going to compress for a couple of weeks? Or worst case, are we going to pull all the way back to 360, bounce, and then rally? Those are the three ways that I'm playing this. And the truth is, I have no idea which one's going to play out, right? I really have no clue. And I'm not going to pretend that I do. But since all of our criteria is met, I'm going to continue to hold a bullish position on this. I have reduced my size, I have moved my strike up, and I'm just going to continue to hold on to this trade. Now, before we hop off, let's talk about that unusual options flow that came through today on Tesla. This one here was not as crazy as some of the other ones we've seen recently, but most certainly unusual. This flow expires 9/26/2025. We had about $5 to $6 million worth of calls come through with a strike price of $470, which is basically $50 out of the money right now, $60 out of the money, which is pretty crazy. This type of flow, if this continues to come in and this type of buying pressure hits the market within the next couple of weeks, this could be the telltale sign that we're going to push through this resistance. And I need you to understand this, right? Big reason why I'm not closing out of my trade entirely. If we sweep, if we break over $420, the move to 500 will happen within 30 days. The same way that we just saw this massive 20-30% move within a week, the same thing will happen there. And so that's why I'm not closing out and hoping for a retest. I'm just going to hold. And if I give some money back, it's whatever. It's not the end of the world. I hope this video helped, guys. Thank you for all of the support. Truly means the world to me. I'll see you all tomorrow.